Good morning. Welcome to Trading Hour. I'm Sonal Putra. With me is Vinny Motiwala. Well, Vinny, it's one of those days yet again. You know, on Tuesday, we were talking about Nifty snapping that 7-day losing streak. We did do that, but we came off sharply from the highs of the day. Today, we did get those cues coming in from the global markets as well that, yes, it could be another day where we would see some red, and it's a steep red that we are seeing across the board. Yes, the Nifty has recovered around 60 points from the lows of the day, but still, it's a 184-point cut that we are looking at on the Nifty. We have the mid-cap sitting with cuts of around 0.4%. Banks are giving a big leg down to the Nifty right now. So that one is down 431 points, though that too has recovered from the lows of the day. It's only Nifty IT which is in the green today, and that continues to be the flavor of the month. That index is up around 4%. We do have an IT analyst we'll be speaking to from JM Financial on the show today, though even that index has come off from the highs. But nevertheless, in a market like this, we have very few movers which are in the green. The advanced decline ratio comfortably in the favor of declines, but we'll have to see, because when we are talking about cuts, there's been slight recovery from the lows as well. Sure. Whether that continues or not will remain to be seen.
Absolutely, that continues or not. We are hoping for some recovery, but given that the current scenario that is going on in terms of geopolitical tensions as well, plus on the domestic front, some news flow, that is not keeping the stocks abuzz. Let's talk about some of the top drags today in the Nifty 50 that we have as well. We have Adani Ports, that is down. We have SBI, that is also seeing a bit of a pressure, down almost 4%. Reliance is down more than 1%. We have L&T as well as ITC, which are under pressure today on the Nifty 50 and coming in as the top drags. So yes, those are some of the individual movers in trade. And like Sonal also mentioned, we have only some bit of a positive side coming in from Nifty IT. Pharma, that's holding on to some bit of a gain there as well. And Realty, that's managing to hold on to the positive side. So yes, that's how the market setup is looking like as of now. But let's move on and talk about the Adani Group stocks. That's what we should be starting with, because all those stocks are in the deep red territory. This is coming in after a US court and the Securities Exchange Commission has charged Gautam Adani and other executives of a bribery and fraud. Hormaz is joining in with us to give us more details of this order and the company's response in terms of that as well. Hormaz?
Extending losses are the Adani Group stocks. At one point now, Adani Enterprises is down almost 23% as we speak. Adani Ports now is in a 20% lower circuit as well, and most other group companies too trading with losses of anywhere between 10 to 20% as we speak, and all of these losses have resulted in a cumulative market cap erosion of 2.6 lakh crore rupees as of now for the entire Adani Group companies. And this has come after the US District Court and the US SEC framed bribery charges, as you just mentioned, against Gautam Adani and other group executives with relation to some solar power contracts. Now the US SEC is also mentioning of a $750 million bond sale that Adani Green had done in September of 2021, and of which almost $175 million were raised from US-based investors. And the SEC order and the district court order also mentions of group executives interfering in the US government's investigation into these charges. Now, in light of these developments, Adani Green Energy put out an exchange filing this morning where they've said that they have called off their proposed US dollar bond sale. And apart from that, there has been no official comment that has come in from any of the group companies in official capacity. Now, GQG, which is one of the early shareholders in the Adani Group stocks at the height of the Hindenburg scandal last year, even they put out a statement saying that they are tracking recent developments currently and they will review any portfolio changes if they need to be made. Now, because of this, GQG shares, which are listed in Australia, are down over 20% in today's trading session. And GQG currently holds stake at around 6 Adani Group companies. But for now, more clarity is awaited from in official capacity from the group, but the stocks deep in the red.
Oh, yes, they are. So we'll keep tracking the story for you. Thank you so much, Hormaz, for bringing us all those updates. So that's about Adani Group. But moving on, some stocks which are on our radar, other than the Adani Group stocks, UPL is one of them, because finally there's another stake sale that has happened in their seeds business. The stock is in the green in an otherwise weak market. Alpha Wave Global will be investing $350 million in the subsidiary of UPL for a 12.5% stake. The subsidiary is Advanta Enterprises, which is the seeds business of the company. The transaction will be a combination of a primary and a secondary sale. The primary sale would involve a consideration of $100 million, which will be invested by Alpha Global, and the remaining $250 million will be the secondary sale of shares in Advanta by UPL. What will this money be used for? Well, the primary stake sale will be used for organic and inorganic growth of the Advanta Seeds business itself, which has been growing well for the company. The remaining $250 million will be used to pay debt, because remember, debt has been a big problem for UPL all along. The deal is valuing Advanta at $2.8 billion in terms of an EV. And remember, KKR had invested around $300 million in Advanta at an EV of $2.25 billion. So there's definitely a valuation upside that we are looking at as far as UPL is concerned, as far as Advanta is concerned here as well. Additionally, the company will also be raising funds via rights issue at around 3,400 crore rupees, 3377 to be precise, at 360 rupees a share. This has been brought down from that 4,200 crore level that the company had initially promised. HSBC has a buy call with a target of 680 rupees a share. They say company appears closer to rights issue as board members have announced terms. Now, of course, there's approval which is required from shareholders as well. Private equity investment in Advanta is a pleasant surprise according to them. There is debt reduction that it would lead to, and that would be positive for the company overall. And PE investment in Advanta is also a valuation boost, which HSBC likes, and that's why some green tick on the stock today.
Okay, some green tick coming in for UPL there. But on that note, we're going to slip into a very short break. But after the break, we'll be discussing what's happening in the world of commodities with Manisha. Welcome back to Trading Hour on CNBC-TV18, and let's shift focus and talk about cryptos, commodities, what's happening on that front. Manisha is joining in with us. Manisha, good morning. Cryptos, that's the blink today, right?
Oh, it is, yes. While commodities are taking a pause and looking at international cues to continue forward from here, it is the cryptos which are not waiting for anybody or anything for that matter. You know, it was in the morning that I saw Bitcoin prices at an all-time high of 95,000 as an all-time high. It's at 97,800 right now and still counting on the higher side. The last run-up or the trigger has come in for cryptos is after the spot Bitcoin ETFs options have gone live on NASDAQ, which was yesterday. The spot Bitcoin ETF options rolled out after a very strong demand from the traders coming in. What we have now in sense, if you want to trade Bitcoin, is you have Bitcoins which you can buy as it is and on exchanges, that is. And then there are Bitcoin futures, Bitcoin options, and now you have spot Bitcoin options which were rolled out yesterday. And that is the reason you have this run-up coming in for the cryptocurrencies all over again. Well, if you look at the markets then, the overall crypto market capital also seems to be surging. It was at 3.22 early in the morning. It would have gained from there on as we have seen the prices run up. Standard Chartered, for one, is estimating that by the time it's 2026 end, you could be looking at $10 trillion of a market cap there from 3.22 right now. So very strong numbers coming in there from various banks and brokerages as well. If you also look at the overall market cap, and I want to talk about the meme coins as well because a lot of people tend to buy that. So meme coin market cap on 4th of November in this month itself was at $59 billion, which stands at $130 billion as of yesterday. So you have seen a lot of money flowing into those meme coins as well. And while there are 10 to 15 top meme coins, but apart from Dogecoin and Shiba Inu, which we have spoken about a lot, there also is Flocky, Bong, Docfifat, and then you also have Peanut, Blub, Shrub, Comedian, Dash. I could go on with those names, but there is money flowing into a lot of them as well. I also want to take you through a very interesting chart, and this is what the Bitcoin prices have done. If you bought them in 2010 at 10 cents a Bitcoin, well, by 2015, you would have made money because $460 is where it was trading then. I'm taking this as 5 years going forward, and 2020, the Bitcoin prices rose to 27,000. And today, I mean, this is the price I wrote in the morning at 94,000. It's trading at 97,800 at this point in time. So, well, this is what we've done in last couple of decades when it comes to Bitcoin. This is what we've done in this year and on an year-on-year basis as well. So Bitcoin prices clearly continuing to outperform various others. We are up by 124% in this year. Ether hasn't performed so well. It actually has been quite stagnant. 35% of gains in this year. But take a look at Solana, Binance, Ripple, Cardano. These are the cryptocurrencies that have real world case uses. These are the ones that are platforms as well. Smart contracts are created on these, and these clearly continue to do quite well.
Those are some mind-boggling numbers. And, we are talking about a market where 35% gains, we are calling them on the lower side. So that's the kind of frenzy that we've seen. Thank you so much, Manisha, for making sense of the moves that we've been seeing in the Bitcoin space. Despite all the skepticism, people are going ahead and investing in cryptocurrencies. But it's time for a short break now. We'll get in a conversation going with the management of Capacity Infra Projects. Mr. Subir will be joining in, who is from the company. Stay tuned. Welcome back. You're still tuned into Trading Hour on CNBC-TV18. Well, Capacity Infra Projects reported a good quarter and saw strong revenue growth of 23% on a YOY basis. Margins expanded likely due to improvement in execution as well. To discuss this and more, we have Mr. Subir Malhotra, the Executive Director of the company, joining in now to take a few questions. Mr. Malhotra, good morning. Thank you so much for joining in. Well, it's been a strong quarter when we talk about the P&L. This despite the fact that a lot of these orders were, or execution was deferred due to elections as well. But if I look at the working cycle, the working capital cycle, that increased. It deteriorated to 213 days versus 198 days, which we saw at the end of FY24. What led to this? We saw some net debt increase as well. Was it just a quarterly phenomenon? And are you seeing improvement going forward?
It's just a quarterly. Well, first of all, thanks for having me over. But having said that, this is just a quarterly phenomenon. Q2 is always a strange place to be in. The rains take a big hit on what execution throws up. So despite the rains having hit us by almost 20 odd days in the quarter, I am glad to get back to the markets that the EBITDA is up, the PAT is up, PBT is looking great. And I think we've had a very good quarter. Rather, I would say we've had a better quarter than the Q1 also.
So what will the working capital days look like going forward, Mr. Malhotra? And what about the net debt as well? Have you been able to get more in terms of realizations and debtors as well?
Undoubtedly, that is always happening. And that is a very proactive case which the management follows up of getting old debts realized. But from a net debt basis, I think we are at 0.11, which by industry standards is very healthy. And I don't think we've really had a big change in the net debt over the past few quarters also. Minor ups and downs are always a matter of working, but we've always remained at that base figure.
Okay, so the working capital days, if you can give us a number, what will it look like by the end of this fiscal? And net debt at these levels, 0.12 is the net debt to equity ratio. That is where it remains?
Yes, so I would not want to be very forward-looking, but I can only say that they would get better. But having said all of that, there is a very poor picture of how I read the balance sheets, and that is cash PAT. And cash PAT is gone up by almost more than 100% in Q2. We were at 63 odd crores, if I remember, on Q1, and we are sitting on a cash PAT in excess of 135. I think it's closer to 138 crores as we speak for the ending of H1. So net debt is healthy, cash is there in the company, orders are coming in from all sectors which are going strong. So I don't see any issue on what I had last got back to the markets of the CAGR that we are going to get to.
Okay, Mr. Malhotra, good morning. This is Vinny joining in the conversation. What I also want to understand is, you've said that H2 is going to be better than H1. You have given a revenue guidance of 25%. In H1, you managed 28%. Then does that merit in terms of an upward revision of the guidance?
No, we would stick with that guidance for the moment. And if we do better, it would always be a nice, pleasant surprise for everybody.
Okay, all right. I wanted to get a sense of your MADA and SIDCO projects. You have been seeing updates there. There are new things happening. They've gathered space as well. What's been the execution run rate in both these projects monthly? How does it pan out going forward now that Q2 tailwinds are behind us?
Undoubtedly, SIDCO is doing very well. SIDCO, we are now touching almost 50 crores of a monthly revenue, which is only being projected as going to do better in the coming quarter. And Q3 and Q4 have traditionally and historically been very, very strong quarters for this industry at large, because the rains are behind us, the issues of festivals are generally behind us, and we are now talking about strong working clear runs till the end of the year. So traditionally, we've had very strong numbers coming out from these two quarters. And that is where I think you were also talking about numbers being better than what they were in in H1.
Okay, Mr. Malhotra, in the past conversation that we'd had with the company's management, you all had highlighted that pricing has come in higher due to lower supply of contractors. Is that still the case? What is the scenario on that front?
Yes. So you see, what has happened now is that be it government jobs in the public sector or in the private sector, the scale of those jobs has gone up. We regularly hear of jobs of 1,000 crores happening in the government sector. And now, even more surprisingly, we hear of 1,000 plus crore jobs happening in the private sector also. So just as a case in point, we've managed to bag a very marquee client with us in this quarter, which is Signature Global. I'm glad to report that it's a 1,200 crore plus order only on shell and core without finishings that we've managed to get. So such orders are becoming the norm as we speak in the industry. And so these kind of orders demand certain skill sets from contractors who are in the organized sector. And that is why the numbers of those are few. And yes, I may not say that they demand abnormal rates, but they demand just rates which the industry is willing to give to them.
Okay. Last quick question before we let you go, Mr. Malhotra. Because of the ban on construction that we've been seeing in NCR, Delhi region, has that impacted revenues in any way? If yes, there's a number to it. How long do you think that will be?
Well, I sit in Grab 4 bound Delhi at the moment, and I see smoggy things outside the window. But yes, construction is on a go slow. Not on a go slow, it's on halt as we speak completely. But we have now come to the fact and understood the fact that we will waste some time in the month of November, just as what we waste some time in the month of July and August in the western sector due to rains. So it is not something that is unheard of or it's coming for the first time. We plan for it. We do alternate activities in it. We do internal, consolidations of, revenues and stores, etc. in this period. And we are aware that this is always happening in the month of November.
Okay, Mr. Malhotra, thank you so much, for joining in with us on CNBC TV18 and giving us your views in terms of numbers and the outlook going forward for the company. But on that note, we're going to slip into a very short break. After the break, we'll talk to Abhishek Kumar from JM Financial Institutional Securities to talk to us about the IT sector trends. Welcome back. You're tuned into Trading Hour on CNBC TV18. Nifty as of now 23,338, down 0.7%. So yes, just around that level when we started the show, managing to hold on to that. Let's keep an eye out on the markets. But shifting focus to the IT sector, Q2 was in line quarter that we saw coming in for the sector with moderate deal wins. Now, JM Financial believes that Trump's presidency will have limited impact on Indian IT service players. To discuss more of that, we're joined by Abhishek Kumar, IT research analyst at JM Financial Institutional Securities this morning. Thank you so much for joining in with us, Abhishek, and very good morning to you. So let me start by what you're talking about, right? Trump, you don't see much of an impact coming in on that. But since the announcement has come in that Trump has won, this election, we've seen that run-up coming in for the IT pack. And IT this year has been doing well. What are your thoughts overall going forward in terms of an outlook?
Yeah, hi. Good afternoon, and thanks for having me here. So, yeah, you're right. We believe, Trump's presidency will have limited impact. There are two aspects, where Trump can impact IT services. One on the supply side, where there could be higher restrictions on H-1B, L-1 kind of visas. But there, our analysis suggests that most of the players have significantly localized their resources in US, and therefore they are relatively immune to any increased scrutiny, etc., on these visas. That's one. I think second is on demand itself. So Trump is seen as pro-growth. He's talking about corporate tax rate cut from 21 to 15%. Last time he cut from 35% to 21%, and we had seen, an increase in S&P earning, after that. So if that were to happen, again, earnings in S&P can go up, which generally has strong correlation with IT services demand. So that could be slightly positive, for the demand in general. So yeah, I think neutral to positive is how I would put it. Trump's impact on IT services.
Okay, so Abhishek, what do you think is propelling IT names now, and what would your take be in mid caps versus large caps versus some of these ERND plays? Because we've seen them run up a lot in this month itself. Is it completely what's happened with US elections, or there are some tailwinds that we are seeing now?
So I think, near term, Q3 we know, is a furlough heavy quarter, seasonally soft, and I think nothing has changed on that front. Some of the run-up is also because there was a pullback in most of the stocks despite a decent Q2. And with some clarity emerging both on rate cuts and, presidency debate behind us, clients can also look at next year's budget with some sort of clarity that generally bodes well for the demand. And the setup, I think in general is looking better compared to the same time last year when clients might be setting up their budgets for 2025. This time, setup is better. BFSI, we have already started to see some green shoots in discretionary spend, which generally is a precursor for, demand in other sectors. I think some pullback, rate cut and presidency uncertainty behind us, and some green shoots in BFSI are some of the reasons why stocks are doing well.
Right. Abhishek, just a word in terms of mid-cap ITs, large-cap ITs, second half of the year of FY25, or when we look much more forward in FY26, where do you see the moves coming in from? Do you think large-cap ITs are going to be participating a bit more in the moves?
Yeah, so let me break your question in two parts. If we have to just look at second half of this year, I think mid caps should do well. And when we talk about mid cap, it has to be a lot more bottom up. And both Persistent and Coforge, they are doing well, very execution focused companies. And I think they will continue to outperform larger caps in terms of growth, and that should reflect in the stock performance as well. But we look at, FY26 and beyond, I think with discretionary spending coming back, some of the large deals which were probably putting some pressure on margins for large caps will stabilize. So large caps should come back. So I think, if you were to ask me today in FY26, I think large cap performance should be slightly better. But near term, yes, I think mid cap will continue to do better than large caps.
All right, take that point, Abhishek. Thank you so much for joining in today and giving us all your take on what's the outlook looking like for the IT space going forward. We'll step into a short break. Kapil Makhija from Unicommerce will join in to discuss the Q2 performance and the outlook going forward. Stay tuned. Welcome back. You're still tuned into Trading Hour. Well, Unicommerce, that's the stock on our radar. The company recently announced the acquisition of 43% stake in courier aggregator Shipware Technologies with a plan to acquire a higher stake further down the line. The company also reported earnings which were in line with estimates. To discuss the acquisition second quarter numbers and the outlook for the business going ahead, we have the MD and CEO Kapil Makhija joining in now. Kapil, good morning. Thank you so much for joining in. Well, it's been a good set, and margin expansion is something that was the highlight because you've come in at around 19%, which compares with the levels of around 15 to 17% that you've seen earlier. Is this a trajectory which is maintainable, or maybe you'll improve on it? Because at the time of IPO, the discussions also suggest that the SaaS industry as a whole has margins of around 25%. Do you go to those levels?
First of all, thanks for having me here. It's a pleasure being here. I think what we've mentioned before and what we still maintain is that the business that we are in, the core SaaS business that we have, it has a operating leverage, which means that our profits will grow faster than the revenues. A portion of our revenue growth goes to our bottom line. But this is because our costs are largely fixed. Our core platform, which is to do with order management, inventory management, warehouse management, has been built out over many years now. And now incrementally, because we are in a fast evolving industry like e-commerce, there are some incremental investments that need to happen. But other than that, there are no fundamental large investments that are required in our core product. And that's why as our revenue continues to grow, our investments don't need to grow in that proportion. And that's why the business inherently demonstrates an operating leverage. And that's why over the last few quarters, we have demonstrated expanding profitability. And that we want to continue demonstrating to the shareholders as well as the investors.
Okay, so the margin level of 19% is something that is surely going to be sustainable for FY25, FY26 at least, right, Kapil?
Can't really comment on the full year numbers, but we will continue to demonstrate the operating leverage in the business.
Okay, sure. Kapil, I want to talk about the SMB clients because they have largely remained stagnant at 2,600, 2,700 levels, right? And whether you look at it on a quarter-on-quarter basis or on a year-on-year basis that I'm looking at. What is the outlook here, and how are these margins on this front of these clients? Is it something in terms of a better margin versus enterprise clients? How does that work?
Sure. So SMB, the enterprise business, it constitutes nearly 90% of the business. So that's bulk of our business anyway. We view SMB businesses some large user.
I think we've snapped the line with Kapil, but surely, what he's talking about right now is in terms of margins, which are good because they are seeing revenue growth, which will, in turn, they're not going to be spending much in terms of investments going forward so far. There's limited investments that they're looking at. So margins is something, and profitability, Sonal, is something that they said that, we could see some improvement going forward, and maybe these levels, something that we've seen a sharp improvement over the last few years, that is something that will be sustainable. As of now, the stock is not holding out too much of a gain, but the market has been weak, down almost 1.3% in trade. A decent number is what they managed to report this time, 13% growth, what we saw, margins at 19%. So yes, that's how we are looking at it.
That is about Unicommerce, but if you look at the markets, the mid-cap index should come up here on the screen because there's been a substantial recovery from the lows of the day. It is at the day's high, actually got into the green for a bit and now is down just 33 points. The advance decline ratio, though, continues to be in the favor of declines by a large margin. So around 600 stocks on the advancing side and we have around 1800 on the declining side. So those lines, they are not merging, but we do have the mid-cap index, which is seeing an improvement. And if we talk about what are some of the stocks that are doing well, Amber Enterprises, for instance, that stock is up around 7% as we speak. And there's a recovery that we are seeing in other names as well. For instance, the private banking index that has turned into the green. It's flat, but with some positive bias right now. Earlier, we were talking about just Nifty IT being in the green, but private banking index is at the day's high right now. We have the realty index, which is up around 1.1%. Nifty Pharma has also come back into the green. So there's definitely a recovery which is underway. We'll have to see whether that continues or not, because it was just the IT space which was doing well when we started the show. In terms of some of the mid-cap movers, let's talk about that because mid-caps are seeing some some sort of movement right now. VIP is up 6.5% and Brigade Enterprises is the other one, which is up 5%. But let's continue our conversation with Kapil. You were making a comment on the SMB clients and the enterprise clients as well. Please go ahead.
So as I was saying, I hope I'm audible now.
Kapil, can you hear me?
I can. I hope I'm audible now.
Yes, you are. Please go ahead.
I was saying that enterprise businesses constitute nearly 90% of our revenue. And by SMB business, we mean these are businesses that have taken SMB plan. These could be large businesses as well. But typically, the very nature of this businesses that take the SMB plan, there is a higher churn in this business. We view these businesses that take our SMB plan as a funnel to our enterprise business, which constitutes majority of our revenues. So the growth of the business is largely driven by businesses that have taken our enterprise plan.
Okay. All right. Kapil, quickly, if you can tell us, you had highlighted that dropship model is favored more by e-commerce players versus the outright and fulfillment models. What is the split between the two currently? Is there a margin difference as well between the two?
So dropship model, there are three models in e-commerce. There is the outright model, which is a classic first-party model in which platforms are buying inventory from a brand. Then there's a fulfilled by model. The third model is a dropship model. The dropship model is the fastest growing model. It has grown. It is now contributing nearly half of the overall e-commerce volumes. In the dropship model, a brand has the flexibility to control the entire customer experience by fulfilling demand through stock that's lying in their own warehouse or in the warehouse of a third-party player. The Unicommerce solution is most aligned to the dropship model, and this is the fastest growing model. As per our estimates, this model used to be early double digits pre-pandemic. It is now contributing nearly half of the overall e-commerce volumes.
Just Kapil, a quick one in terms of the recent acquisition of Shipware Technologies. If you could just tell us, because the company is, as of now, Shipware Technologies is in a loss. So when do we expect that break-even coming in here and synergies from Shipware for the company?
Sure. So I think over time, whatever financials are there in the public domain, they have showed that the Shipware team has been able to reduce the losses significantly over time. In FY23, as an example, they had nearly 42% of loss as PAT, but in FY23-24, that had reduced to about 5% of loss. We see a lot of synergy in the business. One, it is very complementary solutions that we have been able to bring on board. Two, there are also synergies on the cross-sell bit. Today, with the combined entity, we now have 6,500 plus brands and sellers which use both Unicommerce and Shipware platform. So we have a large base to be able to cross-sell the products. So through cross-sell synergies, along with synergies on both direct and indirect costs, we are confident that we'll be able to turn around and make the business break even. We can't really comment on the specific timeline, but we are hopeful with these two synergies, we'll be able to turn the business break even soon.
Sure. Okay, Kapil, thank you so much for joining in with us on the show today. But on that note, we're going to slip into a very short break. After the break, we'll talk about why Indian Hotels is buzzing in trade. Welcome back to Trading Hour on CNBC-TV18, and let's go across to Mangalam, who's standing by to tell us why Indian Hotels has hit a record high today and it's buzzing in trade. Mangalam.
Well, you know, the company held its analyst meet day before yesterday, and as a result of which the street is taking notes of all the disclosures and the targets that the company had given. They intend to double their hotel count to 700 by the end of this decade itself, with revenues doubling to around 15,000 crore as well. And in that, they would have management fee accounting for nearly 1,000 crores, and all the other, verticals that they've seeded, Ama, Ginger, Cumin, etc., growing at 30%. Basically, of this 15,000 crores, 75% would be from existing businesses and 25% from reimagined businesses as well. Brokerages have taken note of that. Jefferies, for instance, has upped its guidance, upped its target price at around 900, saying that delivery on past guidances gives them confidence on deliverability of the new goals as well. And we've had Morgan Stanley too, which is overweight rating on the stock and a target price of 759, telling you that the company will add one hotel every week until FY30, and that's a positive, along with the 20% ROCE claims that they've done. In fact, after the analyst meet, we went ahead and spoke to the management, and this is what Puneet Chatwal had to say to us.
I think especially for India, where India stands today, 5th largest, next year 4th largest, in 3 years from now 3rd largest economy, I think it's the beginning of a boom period for hospitality, tourism and leisure sector. 60% of our growth going forward will come from the non-Taj portfolio or our traditional properties and selections or in Vivanta. So a lot of the growth will come from our newer brands, especially Ginger is expected to grow exponentially. We expect to grow rapidly the Tree of Life brand. These are small boutique properties.
Okay, and with that, it's a wrap on this edition of Trading Hour on CNBC-TV18. Thank you so much for tuning in. Don't go anywhere. Halftime report up next.